I have a lot of experience finding and managing investors in property, and in this video I'm privileged to share some of this with you. The property world is all about deals and money. If you have the right contacts, a good deal, and know how to approach and manage investors, money can definitely be available to you. But it's important to know your job is not to sell a fabulous property deal to investors, but rather to manage expectations appropriately so you can work together for a win-win outcome. When approaching investors, they will expect to see proven expertise in the sector you're seeking funds for. Other people's money shouldn't be used to help beginners learn. Your education, experience and track record matter, so be truthful and open about this. Remember, investors are not just rich people who have so much money they don't know what to do with it. They're just people like you or me who are looking for a good return on their funds. Always respect investors and be grateful for how they are facilitating your success. And however wealthy or average they are, take the utmost care in your handling of them. I'm going to discuss three types of investors in this video: the high or ultra high net worth, the professional property investor, and the amateur or non-property investor. There are many subsets within these groups, such as private bridgers, property crowdfunders, private equity and family trusts, but I won't cover all of them here. Let's start with the high or ultra high net worth individuals. This group are in the main looking to purchase assets which may be land or multiple units, such as apartment blocks or high value residential units in city centres such as London. They're often looking at minimum investments of 3 million plus. They will often purchase for cash and prefer to control the asset with a first charge. Ultra high net worths are good people to sell large deals to, but they mostly won't be found hanging around property networking events because they've got better things to do with their time, such as sailing around the Mediterranean on their yachts, playing poker at the casino, having meetings in high-end bars and restaurants in Mayfair, or flying their private planes. You get the picture. The good news is that you only need one of these people to recommend you, because they have friends and business associates who will follow their lead. But you do have to find them and then navigate your way through their team of professional advisors. You'll need to communicate and be able to deliver detailed financial information in the format they require. And your high net worth contact has to like you, trust you, and want you rather than someone else to be their go-to person in property. This is assuming, of course, they have a say in how their funds are managed. If they have a business or finance background, they probably will, but some won't and will rely on their advisors to tell them whether the deal you're bringing them is likely to work or not. Instead of selling deals to high net worths, if you have the right background, you can also be their go-to development expert, obtaining planning and developing assets for them. Remember that just because someone has a lot of money, they will never put up with those who treat it casually. High net worths are the most protected people on the planet. Their lawyers will ensure that at any sign of mismanagement you are kicked out with nothing to show for your efforts. Also, it goes without saying that you should never get involved with high net worth money laundering criminals, because if things go wrong with them, instead of legal action, you'll suffer some grisly death, getting thrown from a 4th floor balcony and impaled on the railings below, for example, or taken out to sea and pushed overboard, which of course, because it's carried out by professionals, will be reported as a suicide or tragic accident. Yes, it really happens. The next type of investor I'd like to discuss in this video is the professional property investor. These are financially skilled, seasoned investors who generally understand property and may have released funds from their own portfolio or development projects which they need to put to work. Their target return will be a minimum of 20% per annum plus, or half of project profit, depending on the size of the project and the amount invested. And they will have more of an appetite for second charge lending, as they understand property and know how to evaluate deals. Professional property investors can sometimes be found at networking events, although their ratio to the people who are looking for their funds may be as little as 20 to 1, so the best way to attract their attention is to be the person at the front of the room giving the talk and demonstrating expertise. It's also possible to attract professional investors through business networking or an active and expert presence on social media. Both Facebook and LinkedIn have property groups and forums. And if you show up and give value, you will forge relationships which can then be brought into the real world. The main challenge with professional investors is that untamed and with a keen eye for a deal, they can be both exceptionally greedy and overly risk averse. So you need to get to know them well, often over a 6 to 9 month period, and set appropriate expectations before commitments are made. Finally, I'd like to talk about the non-property or amateur investors who are willing to lend smaller amounts into deals for lower fixed returns, between 5 and 10%. The best way to find these people is at local business networking events, unless you have family or friends with spare funds who are willing to work with you. You have to put consistent time and effort into this type of networking, showing up regularly so that you establish trust and credibility with your contacts. It takes a lot of work both to find and manage this type of investor, but they're ideally suited for smaller projects, and if you're prepared to service them properly, you'll end up retaining more of your project profit. You can come to one of two arrangements with these investors. Some prefer to be paid their interest monthly with the capital released at the end of the project. Others are happy to roll up interest and have the entire amount repaid at the end. A word of caution: before you get family or friends involved, make sure your deal is low risk and secure, or the impact of your choice to use their funds can have very difficult consequences, both for you and them. So please be very careful, as I would not like your long-standing friendships or family relationships to suffer for the sake of business. My name is Jane Baylor, and I'd like to welcome you to my video series for property entrepreneurs like you who want to be the very best and most successful versions of yourselves. If you've enjoyed this video, please give it a like and leave a comment, which I promise I'll read. If you've got ideas for other topics you'd like me to address, please suggest them here, as I want to create incredible value for you. Thank you for watching. I'm truly excited to have your interest.